The long-awaited 13F filings has finally arrived. Do you know what Warren Buffett did, what Soros did, what Ray Dalio or Cathie did within the April turmoil? In this video, we're gonna have a look at that. Also, don't forget to subscribe to the channel. My name is Dalio. Let's crack on. So the 13F filings has arrived. What does these 13F filings mean? So 13F filings are compulsory filings that has to be done by asset managers, hedge funds, those that manage above $100 million. And these positions that they actually fill out these forms, they are only US positions. So US stocks, US shares, and US bonds. Also, there's another reminder. It is due 45 days after the quarter closure. So that means that this particular Q2 2025 reports are going to be from the 1st of April to the 30th of June. So it's going to be really, really interesting to see what are the big players invested in this April turmoil and what they did in the beginning of the summer. Let's start with Warren Buffett and his investment management company, Berkshire Hathaway, although it's a good thing to mention that he's going to retire by the end of 2025, so his term will expire on the 31st of December 2025, so he's going to be the captain for that ship for the next 2 quarters, and then he's going to pass that torch to the next president of the company, who's going to be Greg Abel. He's a decent guy, but he's a little bit old as well, so I mean, but compared to 95, he's 60-ish, so we can say that he's a brand new baby compared to Warren Buffett. So let's have a look at his portfolio now.
I think there are 2 major takeaways from Berkshire Hathaway's 13F filings. The first one is a new company. They entered into a new company, they bought some stocks in a company. And the other one is Berkshire Hathaway's cash bar. That has been talked about in the past, but we need to mention that because I think there's some tricky bits that we need to know about. But before we dive into that one, let's see the minor changes of Berkshire Hathaway's portfolio. They started, we can say that they started selling Apple again. It's not a new thing. They've been doing this for quite a while. They also continue to sell Bank of America shares. And there's a tricky bit one. They bought some Chevron shares, which is quite unusual because in the last probably 1.5 years since the pandemic and 2022, when the oil prices started to go up, especially after the war, Berkshire Hathaway bought a lot of Chevron stock and now they are realizing profit. And this is why it's a bit interesting, because last quarter, what they did is they didn't realize profit. They rather bought some more Chevron shares. Now, the new company that was highlighted and everyone was a bit maybe surprised with their choice is United Health. Now, United Health had many problems throughout the year. This is why it's down probably 40% year to date, and this 40% is actually after it has risen about 10-ish percentage, because Warren Buffett says that, yeah, we bought a major stake in the company. Now, major stake would be about 0.5% of a company, but if we calculate about $250 billion, now 0.5% of that is quite a massive amount. And in the first quarter, they came out with quite a terrible first quarter earnings. The stock plummeted more than 20%. This was the worst reaction to an earnings call in the past 26 years for the company's history. And then they had problems, they had legal problems, they had revenue problems, they had profit margin problems. So there was quite a few problems. But now it seems that Warren Buffett and his team sees it as a great value investing. So this is why they actually bought the stock. It's quite interesting that they bought it around $400. So they are still in the red, they are still in the negative, but as we well know, Warren Buffett, Greg Abel, and the team, they pick in stocks for the long term, so 5, 10, probably even 20 years. So this is how they see, this is the glasses that they see through the companies. Now, there were some minor new companies as well that we need to mention. One particular one is Nucor, which is North America's largest steel manufacturer and steel recycler. We can have a think why they bought this one. Remember that these are from April to the last day of June. So while the tariffs were negotiated, this is why it came up that they maybe want to take a part and the share of this company. And if you go through its quarterly earnings, you will see that the tariffs actually will be quite beneficial to the company, because imagine that you are a US company, you were bringing in stuff, aluminum, steel, from Europe, from Brazil, from China, from whatever other country, and now you are facing a 50% tariff or 30% tariff or whatever. It's quite a high tariffs. What you're gonna do? You probably want to swap supply chains and providers, and if that provider is in the US, then you don't have any tariffs. So that's why they can be a massive winner from this tariff war. The only tariff that might be interesting for them is the Brazil one, because they have some Brazilian contracts, so they have to mitigate that one. But as you go through and skim through the quarterly earnings, you will be able to see that the management is trying to mitigate that impact as well. And there were two other companies that I think is worth mentioning that Berkshire Hathaway added to the portfolio. One is Lena Corporation and the other one is D.R. Horton. Now, what we need to know about these companies, they are building ones. They build stuff. They actually build single family homes, multifamily homes, and a couple other buildings that they do. So actually what we can see is Warren Buffett and his team, they are focusing more on materials, on industrial stocks, and also the typical value stocks that they've been doing in the past 60 years. Now, if we go and move to the major parts, that was the first major part was United Health, and the other takeaway is its cash position. Now, the cash position really hasn't much changed, because everyone was thinking that maybe in April, due to the tariffs and about 20% down on the S&P 500, they might want to buy a lot of shares, but they actually didn't. So if you check what was their cash pile, now the cash pile is not just cash and cash equivalents, it's also the short-term US Treasury bills, which is less than 12 months maturity. If you compare these two numbers, they are quite identical. So still the cash pile is above $300 billion. Now that is a massive, massive amount of cash. They won't be able to buy that many stocks. Just look at what happened to United Health. They bought 0.5% of 250 billion and the stock moved by 10%. Now what happens if you want to buy a stock or two or three stocks for $300 billion? Now that means that you can buy probably two or three companies straight away. So the question that rises here is that will they be able to actually buy massive amounts of stocks and shares on the stock market? My answer is probably no. The only scenario that they will be able to do that if the market goes into a correction and the market goes down by at least 20, but maybe 25 or 30%. So probably you can ask the question, do they see something in the future? Do they see that maybe there's gonna be a massive correction in the next 1 or 2 years? So that's why they are holding back and they're not buying many assets and they are stacking up cash. Or they just have too many cash and they can't do anything with that. Now that's gonna be the future to find out.
Let's look at the changes of Ray Dalio's portfolio, Bridgewater Associates portfolio, and this is particularly interesting because if you followed the last video that I did with the 13F filings after the Q1 2025 filings, what we highlighted is that Ray Dalio, aka Bridgewater Associates, they moved away from the stock market. So they actually decreased the S&P 500 rate from 22% to just under 9% of the whole portfolio, and they started to move into gold. So they sort of backed off from the market before the big crash and waiting. So it's really, really interesting what they did in the next quarter with the April turmoil.
There are two major takeaways from Bridgewater Associates 13F filings. It's quite similar to Berkshire Hathaway's where I said that there's going to be two major takeaways. The first one is related to S&P 500. What they did. Do you remember what they did in the last quarter? By the end of March, they closed quite a significant amount of S&P 500. Now they actually continued it. So I was thinking that maybe what they will do is that they bought massive amounts of S&P 500 when the stock market plummeted in the first half of April, but actually they didn't. What they did is that they realized a little bit of profit, so the actual portfolio percentage dropped from 8.7% to 6.5%. But what they did is that they doubled down on tech companies and information technology companies. Look at what happened to the massive, massive market cap companies. Nvidia, they doubled it, more than doubled it, from 1.5% to 4.6% of the portfolio. This is, remember, this is by the end of June 30th. Exactly the same happened to Google, 2.1%, doubled it to almost 4%. Microsoft from 1.4% to the total portfolio, now it consists of 3.4%. It's the same with Meta, from 1.1%, it's almost 2.5%. So what they did is that they doubled down on tech stocks, and that was a brilliant choice, to be honest. So that is a massive, massive thumbs up for Ray Dalio. And the other interesting takeaway from Bridgewater Associates 13F filings is that they sold almost all of their Chinese stocks. Alibaba, PDD Holdings, Baidu, JD, and then if we go down, you can see that more than 10 Chinese holdings were sold off. Now, that is an interesting part because if you've read Ray Dalio's book, he usually talks about how market cycles work, how empires collapse, and then what he forecasted is that the US empire will, it's not an empire, but you know what I mean. So the US led order, the US led world order will collapse, and the Chinese will be the next one in line. And that is interesting because, as you can see, he wrote something a couple of years ago, and now he's exiting from literally all of his Chinese investments and he's doubling down on US. Actually, probably we can argue with that a little bit because he's not doubling down on the US itself. He's doubling down on US AI and tech stocks. And we'll see if that pays out in the future.
Now let's continue with Soros Fund Management. You already know that they are really big with bond investing. Now let's take a look what they did with the bond positions that they already had.
I think we need to start with the difference between Soros Fund Management and Berkshire Hathaway. The reason behind that is that maybe I will say that this company is a great company, and then you will say, well, then this company is not really a great company. We might both be right, and the sentence might still be true. And the difference between if I'm saying that this company is good and you say that this company is bad is the time horizon. And look at what happened with Soros Fund Management. So they actually sold some S&P 500. It's a put contract, so it's an option contract, but we can call it they sold S&P 500, and they actually stacked up on QQQ, which is Nasdaq 100. Now, the other part why I say is that this is a little bit controversial in terms of if this company is good or if this company is bad, because they are doing exactly the opposite of what Berkshire Hathaway is doing. They actually opened new positions. They opened put positions. So what that means is they are counting for those stocks to go down. And two of those ones is US Solutions and the other one is General Electric, actually GE Aerospace to be specific. Now what that means is that those materials and those building companies that Berkshire Hathaway is betting on, actually Soros Fund Management is betting that they will not collapse, but the share prices will go down. And actually both of these institutions could be right. So in the short term, if they go down, Soros Fund Management is winning. If they go up in the long run, then Berkshire Hathaway is winning. So just make sure that you keep that in mind. Also, what they did is that they continued with the bond selling and bond buying. The two major takeaways that I think we need to think about is that they bought a new 1.5% convertible notes from Global Payments. As you probably guessed it from the name, it's a payment processor company. and it is a convertible note. What that means is by the end of the 1st of March 2031, they might be able to be converted into actual shares and stocks of the company. Now, this is quite regular for Soros Fund Management. This is what they did with Rivian in the last quarter. They bought Rivian bonds, convertible bonds, and now actually, if you see that, they are sort of exiting from the company. Not in a massive way because they just reduced their bond holdings by about 7%. So it's now about 1.9% of their total portfolio holdings.
Finally, let's take a look at ARK Investment Management's portfolio, aka Cathie Wood's portfolio. And you probably know her from 2020, 2025, when she became really famous from making billions and billions of dollars from Tesla stock.
The phrase that comes up to my mind regarding to Cathie Wood's portfolio is profit taking. Because as you can see, the biggest shares of his portfolio in terms of percentages have been sold. So they actually sold quite a few Tesla shares, they sold quite a few Coinbase shares, and so on and so on and so on. But there is another thing that we need to mention, and that is Circa, because they took a new position in that company. It's actually quite a hefty position in terms of the percentages of the total portfolio, because it's almost 4% of their new portfolio. Remember that this is by the end of June 30th. Now, what we need to do about Circa. Now, Circa Internet Group is the provider of stablecoin. Actually, USDC is the stablecoin that they provide. So they are really crypto related and heavily crypto related. However, they are moving towards a path where they can integrate USDC and these stablecoins into the mainstream financial markets with payment processing, with wallets, and they actually bought a company that helps them build up their own blockchain. So by the end of the decade, they will be able to provide payment solutions for many businesses and many consumers all around the globe. And their new and fancy idea is to make border crossing payments as cheap as possible. And this is the group that ARK Investment, aka Cathie Wood, took a chance. And if this chance is a great one, and if this chance pays out, then the payment will be definitely massive for ARK Investment.
As you could have seen, there were definitely really good and interesting figures and facts that came out with the 2025 Q2 F13 filings, and I think it's really good to have a sneak peek into these big players, what they think, how they think, and what they are going to do, or what they did actually in the last quarter. Before we go, don't forget to hit the subscribe button, and see you in the next video. Bye.